Do you think what's happening right now in the stock market, do you think it's a temporary correction before we go higher again in the next several months this year? Or do you think this could be something much more negative, something much more bearish?
And you can see that the average decline after a Dow 30 sell signal is a further 11.22%. There is still lots of room for the stock market to fall.
I think, am I correct in saying you don't sell everything? You don't sell all of your holdings. You only sell 50% of what you own.
As a trader, if I know that there is the probability of a further 11% drop, then I know that I can profit from this statistical insight.
This Dow theory sell signal does not mean that a trader or investor would exit the market completely, and then preferably buy at a lower level. At a much lower level.
When you get a sell signal, 60% of the time, it will be followed by a real bear market, the real thing. So this is really a big warning sign. I suspect it's going to be a full bear market in the second half of this year.
All right, guys, hello and welcome. We're honored today to have trader and analyst Manuel Blay at DowTheory.com with us. This should be a very interesting video because Manuel's going to talk to us about an important warning signal, which is not triggered for quite a long time. Manuel's going to explain to us what this important warning signal is about the stock markets and what does it mean for the markets. Could it be bearish or could it be bullish for the markets? Which is it? All right, guys, join us. All right, guys, welcome back. First of all, Manuel, thank you very much for joining me in this particular session. And the reason I want to talk to you is because just recently you mentioned that an important warning signal has triggered for the stock market. And I think potentially also Bitcoin as well. Now we'll go on to Bitcoin separately. So Manuel, first of all, thank you for joining me in this particular video. And by the way, where are you? I think you're in the Dominican Republic, am I right?
Yes, but first of all, thank you for having me on your YouTube channel. You did really do a great job. I don't miss any of your videos.
Oh, thank you.
Yes, I live in the DR. I live in the Dominican Republic, but I'm totally connected to the United States for my trading.
Guys, before I begin, let me also mention that Manuel Blay is the new editor of the DowTheory.com. The Wall Street Journal mentioned the DowTheory.com, again, Manuel's newsletter, as being one of the best market timing newsletters out there. Guys, by all means, do check out Manuel's great offer and discount for his newsletter. Again, I myself read Manuel's newsletter that comes out every month. Again, I think it's by far one of the best research newsletters on the stock market out there. And by the way, he also covers Bitcoin in the newsletter as well. So I do highly recommend check out the discount that Manuel's offering you on his newsletter. See the link in the description for details. So Manuel, listen, let's not keep us in suspense anymore. What is this warning signal? What does it mean?
Well, the stock market doesn't like tariffs. And of course, there is lots of uncertainty. No, it's like that. Like tariffs. And well, we got on March 3rd, Dow theory sell signal.
Sorry, a Dow theory sell signal.
Okay. Yes.
Sometimes referred to as the Dow theory bearish signal. But the parameters of this Dow theory signal is specific to you. Do you have a specific methodology in which you calculate? And by the way, Manuel will explain to you why this particular signal has triggered. But guys, let me also mention that this video is by no means a recommendation to buy or sell or short the stock market. Okay, it's purely for educational purposes. Manuel, go ahead.
Yes, I differentiate between what is called a sell signal and a bear market because, of course, one could think, okay, sell, oh, it's a bear market. Not necessarily.
So it's not the same thing as a bear market. It's not the same thing.
Exactly. We say that the sell is bearish, but bearish condition is not the same as a bear market. A bear market, the official definition is a 20% decline with our own definition, which is minus 16%. So we get sell signals much earlier, normally at around 7.5%, 7.5% off the top. So in other words, it's a bearish condition, a sell signal, okay, certainly it's not bullish, but it doesn't mean that we are in a bear market now. So this is different. And sometimes people ask me, but Manuel, then why don't you wait until you get the bear market? Because then maybe you will get whipsawed because you're going to, if it's not a bear market, maybe it's going up. No, because the statistical record, if you want, I can share slide.
Go ahead.
Okay, as you can see in this slide, so implications of the Dow theory 21st century or flavor sell signal. And you can see that the average decline after a Dow 30 sell signal is a further 11.22%. So it means that there is still significant, on average, downward price action. So when we had a sell, there is still lots of room for the stock market to fall. So the average duration of the decline is 4 months following the sell signal. So it means, once again, that on average, there is lots of downward price action. Furthermore, more important, the probability of a bear market following a Dow 30 sell is 60%. In other words, when you get a sell signal, 60% of the time, it will be followed by a real bear market, the real thing. So this is really a big warning sign. 60% of the time, the market will continue lower and even much lower, because furthermore, there is a cascading effect. When you get a bear market, then there is also a further decline following the bear market. So in other words, this is not a bear market, but it's a wake-up call.
So just to be clear, from your data, which you're showing here, you're saying after a Dow theory sell signal, there's a further decline, there's a further drop in the market, usually by 11%, typically.
Exactly.
Not every time. There have been exceptions, but typically you see 11% further decline. And the probability of a bear market increases by 60%, which is quite high. Again, it does not mean you are in a bear market. It just means the probability of potentially getting to a bear market at some point in the next few months, next several months, increases. And the probability of a recession also increases by 27%. Is that correct?
Exactly.
By 27%.
That's not that much. As a trader, if I know that there is the probability of a further 11% drop, then I know that I can profit from this statistical insight. Say, okay, it's going to drop on average 11%, then it's a tradable opportunity. For me, the tradable opportunity is to sell with the hope that I will rebuy at a lower price level.
You mean the S&P could potentially drop to 5,400 or 5,300?
If it were to follow the normal drop pattern that we see when there is a Dow 30 sell. Yes.
I'm glad you mentioned this. Thanks, Manuel. I think, am I correct in saying you don't sell everything? You don't sell all of your holdings. You only sell 50% of what you own. Am I correct?
Exactly, because I have another time indicator, the Blay time indicator, which is mostly based on margin debt.
Right.
And this indicator hasn't triggered a sell for the time being. If margin debt, the trend of margin debt changes, then it could trigger a sell signal, but not yet.
So what you're saying is, because this signal triggered recently, this Dow theory sell signal, you made a decision to sell 50% of your stock market holdings, particularly the S&P we're talking about here. Is that correct?
S&P, QQQ, the NASDAQ.
But you're still in the market by 50%. You're still 50% in other words.
Yes.
Okay. Am I correct in understanding the Dow theory signal, the Dow theory bearish or sell signal, which is that after an uptrend, after a bull market, first you wait for a 3% decline on both the S&P and the Dow Industrials or the Dow Transportation Index.
Exactly.
That's what's called a secondary reaction. So in other words, it's a negative move against the predominant uptrend. Right. That's called a secondary reaction. Then you're looking for a bounce of about 3%, a bounce which must stay below the prior high, and then another drop, another big drop below the low that was formed at the previous drop, below the low of the secondary reaction. And now again, just to be clear, this Dow theory sell signal does not mean that a trader or investor would exit the market completely. In fact, the way that Manuel Blay uses it, it's a warning, but Manuel prefers only a 50% exit out of the market, and then preferably buy at a lower level, at a much lower level, if the conditions apply at the lower level, that is. The S&P and the Dow Transportation Index, both of them have triggered the Dow theory sell signal. And this occurred
March 3rd?
March 3rd, right. So this occurred on March 3rd. March 3rd. And you said that because of this, you decided to go into a 50% sell. In other words, you exited or you sold 50% of your stock market S&P ETF holdings. This is because there is an increasing risk of a further decline of about 11%, and also a high risk of a potential bear market there's a probability of that. Now, again, we should remember, guys, this does not mean that the stock market has to drop. Again, we're talking about probabilities, not certainties. And the second thing is, it does not mean that we're already in a bear market. It only shows that there's a probability. There's a 60% probability that we might drop into a bear market in the next several months. Because this recent sell signal has been triggered in the Dow theory, what are your expectations? Do you think what's happening right now in the stock market, do you think it's a temporary correction before we go higher again in the next several months this year? Or do you think this could be something much more negative, something much more bearish, that we might actually fall into a bear market? And do you think that, more, for example, the stock market's topped? So which one is it in your view, a correction, or has the market topped and we're falling into a bear market in the next several months? What do you think?
It is a correction now, and I suspect it's going to be a full bear market in the second half of this year. So once again, it's an issue of time frames. I can say I'm bullish and bearish and be right on both counts. I am still bullish now, and I am bearish for the second half of this year. Why? Margin debt is very positive. It remains positive. So in a bullish trend, a margin debt really influences, has a predictive power for the stock market. So we have a bullish reading for margin debt. So it means that our readings that do not suggest a bear market. I still think it is a correction because margin debt is suggesting that we still have a run up in the next 4 or 5 months. So the pattern says that the S&P should make more than usual in the next 5 months. And then, of course, then after the second half of this year, then we should expect margin debt to make less money than usual. And because on other reasons, for instance, we have an inverted yield curve and things like that, I suspect that the second half is going to be really complicated. But of course, now, just me now in our time frame for the next 3-4 months, I'm still bullish in the sense that I think that we are undergoing just a secondary reaction, but it's going to bounce once again, it's going to rally higher. And then, of course, in 3, 4, 5 months, then look down below. This is what I think. But, you know, I'm a trader, so I'm flexible. When things change, I change. But this is what I'm seeing now.
Manuel, it's possible some people may be confused by what you just said, because they might say, well, Manuel, if you're saying the margin debt has been increasing, so there's been margin debt, in fact, exploded by 14.95% in the last 3 months, and that's a bullish factor for the stock market. And you're saying that the drop that's occurred just recently over the last several months, you're saying this drop is a temporary correction. Then why did you, for example, sell 50% of your stock market holdings? And why did you pay attention to the Dow theory sell signal? So some people may scratch their heads and say, this doesn't make sense. Could you explain that point?
There is a likelihood that the market drops still 6-7% more. I don't know, maybe stops now. I don't have an idea, but I live by probabilities. So the probability is that the stock market will fall a further 11%. And this is the probability. Some trades go sour, but most trades don't go sour. So it means that I have the possibility of re-entry at a lower price. So I'm exiting here, but most likely, on average, I will buy lower. And this is how you make money when you're a trader. We get a trade per year on average, so I'm not a day trader, but nonetheless, once in a while, the market gives you an opportunity. So if I sell 50% of my holdings at 100, and I have the opportunity to rebuy at 96, which is more or less the pattern, 4 points lower, 4% lower, why not? So I'm a trader. So I know I have a 60% possibility, more or less, of buying lower. So, and on average, I make more money by doing that. And this is why I hit the signal. And furthermore, the pattern of outperformance starts really rising in the second month. The first month, there is almost no pattern of outperformance. I expect to have a correction more or less until mid-March this year. And then afterwards starts going up. But of course, I'm talking about probabilities. So I don't want to be macho. So, oh, look, I know everything. No, I know. I have the trader's mindset. I live by probabilities,
Yes.
and I get whipsaw sometimes. Ouch! I had to rebuy at a higher price. Don't worry, that's 50%. What I know is that by being disciplined, little by little, my equity curve goes up. And the important thing is that I keep drawdowns in check. So, and this is why I hit the signal. I get a sell, I sell.
I totally agree with you, because I think paying attention to the rules, I think every trader, every investor should have a set of rules that they abide by, that they stick by. And I totally agree with you. Even when the rules sometimes don't seem to make sense, you look at the market and you think, wow, that looks like a good time to buy. But if your rules say no, be careful, be very cautious, then stick to your rules. I totally agree with you. I think the people who watch my videos here are intelligent and sophisticated people. So I'm sure our viewers know that we're dealing with probabilities here. We're not dealing with certainties. You're seeing a lot more risk at the moment in the market, the risk of potential further declines. I mean, there could be a bounce. There might be a bounce in the market. I mean, we've seen a bounce so far. There might still be a bounce, potentially. A bounce, for example, on the S&P back to 5980 or 6,000, for example. You're still thinking that, you know what, there's still likely risks out there. What do you think? What is your hunch? What does your gut feeling tell you?
Liquidity is improving and margin debt is still bullish unless we get a horrible reading in the next 2 weeks. Things can change, but my data now suggests that a rebound is due. Not now, by mid-March.
I understand what you're saying. So what you're saying essentially is that even though you're seeing potential risks and complications in the next few weeks, going to the end of March potentially, but you're still overall bullish on the market up to June. I think in the next several months. I think your newsletter said. I think your newsletter said that there potentially could be a new high in the stock market in the summer, by the summer of this year, sometime by June, for example. Yeah.
But I'm very worried afterwards because the pattern of margin debt suggests not a crash, but underperformance the second half. And we have now an inverted yield curve. So the 3 months, 10 years yield curve has inverted again. So all these things together makes me a little bit bearish for the second half. So I still think we will get the last rally, but then let's see what happens. But I'm very sure.
That's very interesting. So overall, what you're saying is because of increasing margin debt and increasing liquidity, that keeps you bullish for the next several months, in the longer term to the middle of this year.
Exactly.
Although you're saying that after June, after July, things could get much more negative and much more complicated, and we might even see a top in the market sometime after in the second half of this year. In other words, perhaps after June, July. Okay, that actually, I think I agree with you as well on that. But essentially what you're saying is that this current volatility and drop we're seeing in the stock market, but you're seeing as a temporary correction to some key support levels. You're saying that perhaps the stock market could drop even further, a little bit lower. But overall, you're seeing that you're seeing the next several months a recovery to new highs. The reason I'm actually putting it like this, because often I get comments on my videos, people say, oh, you guys are saying it's going to go up and it's going to go down, so no matter what happens, you can say you're right, which is a very childish and immature comment, very silly.
Time frames.
Yeah, exactly. They just ignore what we're saying. They ignore the context and the time frame we're talking about. So guys, do check out Manuel Blay's excellent newsletter. Again, according to the Wall Street Journal, the DowTheory.com newsletter is one of the best market timing newsletters out there. I read it enthusiastically and religiously every month. I think you cover a brief.
There is a crypto letter, so there is a specific letter for crypto as well.
So is that included in the offer as well, Manuel? Both the crypto and
you get both. You get
both. Great, fantastic. So guys, check it out. The link's in the description. Go to that link. And it's a special offer, special discount that Manuel Blay is giving you for his DowTheory.com newsletter. Check it out while the discount lasts. And again, don't miss out. The link is right there for you, again, in the description. And go on that link, subscribe. And thank you very much, Manuel. Really appreciate it. And we'll cover Bitcoin in a separate video. Thanks very much indeed. Cheers, guys.
Alessio, thank you.